Welcome back. Today we're diving into a new platform called Surge, and honestly, it's making some pretty serious waves in the Cardano ecosystem. Let's get right into it, because what we're really talking about here is a new model that could totally change how value is generated on-chain.
So that's the big question, right? How can just one single app reshape an entire blockchain's economy? That's the core idea behind Surge. We're going to break down how this one platform is aiming to become a massive economic engine for Cardano. And the reason we're all paying attention, well, it starts with a number that's kind of hard to ignore.
Yep, over 3 million ADA. And get this, that's the potential annual revenue Surge could be pumping into the Cardano Treasury with just a few hundred active users. So this isn't just about a cool new app. It's about creating a sustainable new source of funding for the whole ecosystem. So how on earth does it work? To get that, we first need to look at a fundamental problem in the world of DeFi. And that brings us to what you could call the DeFi dilemma. You see, in the world of decentralized finance, there's a ton of capital, but a huge chunk of it is, well, it's just sitting there, not doing much of anything. It's a huge problem of static liquidity. Think about it like this. On Cardano, the activity inside these decentralized apps, or dApps, pretty much falls into two buckets. On one side, you've got the active stuff, trading, people swapping tokens, borrowing, leveraging. That's where the action is. And on the other side, you've got yield. This is usually passive. You just park your assets in a pool and hope to earn some fees. And that right there is the key point. In almost all traditional DeFi, that yield generation is super passive. Your assets are just sitting in a smart contract, basically just code on the blockchain, waiting for somebody to come along and trade against them. Only a tiny, tiny fraction of that money is actually used on any given day. It's kind of like having a huge factory where 90% of the machines are turned off. And this chart, wow, this just shows you the night and day difference. A normal liquidity pool might see a volume to liquidity ratio of maybe 10% in a day. That means for every dollar in that pool, only about 10 cents worth of trading actually happens. But with Surge, that ratio can just explode to over 1,000%. The very same dollar can generate $10 in volume. It is a monumental leap in how efficiently that capital is used. So how does Surge pull this off? Well, it flips that whole traditional model upside down with something they call an active yield model. It's all about making that liquidity work a whole lot harder. This quote right here really gets to the heart of it. Instead of your assets sitting there passively waiting for traders, Surge takes your assets and becomes the trader. It's actively routing your money to go out and execute profitable trades. Let's walk through a super simple arbitrage example to see what this looks like. Okay, first, the system is always monitoring the market. It spots a stablecoin that's trading for, let's say, 99 cents. Second, it acts. It uses the liquidity from users to snap up that undervalued stablecoin. Third, when the price bounces back up to over $1, it sells and locks in that profit. And finally, and this is the magic part, it just repeats this over and over and over, hundreds of times a day. Your capital is never sleeping. It's always out there, hunting for opportunities. This whole concept is called a high-velocity model. The same pot of money gets used again and again and again, generating way more on-chain volume and transactions than a traditional pool ever could. And why does that matter? Well, more transactions mean more fees for the Cardano network, which feeds directly back into that treasury we were talking about. And just to show you what this looks like on an individual level, get this. A single user running just one strategy on their own computer can generate over 1,400 on-chain transactions in one day. That alone is a pretty significant chunk of Cardano's entire daily transaction count. Pretty wild. Of course, having a brilliant vision is one thing, but actually executing on it is a completely different ballgame. And Surge's journey since they launched on mainnet has been a fantastic example of building in public and really listening to the community. Let's be real, the launch had some bumps. There were some transaction issues, a little bit of confusion with the data on the dashboard, but what really matters is how a team responds to that stuff. And the Surge team just jumped on these issues right away. And they didn't just put on a Band-Aid, they did some serious upgrades. They switched over to Maestro, a much more robust data provider, to get transactions working smoothly. They even built their own dedicated node to get faster price data. And they cleaned up the dashboard to make sure all the stats were crystal clear. These were major moves to build a reliable platform. So once the platform was stable and humming along, the team shifted its focus to the future. The goal now is to evolve Surge from a platform that runs these simple strategies
to one that can handle hundreds of really complex, powerful trading algorithms all at once.
And this is the heavy lifting they're doing to make that future a reality. To bring in PineScript, which is a super popular trading language, they are building a seriously professional tech stack. I mean, this stuff covers everything from smooth routing and wallet connections to a slick modern user interface. The takeaway here isn't the specific names, but the fact that they are building an institutional-grade platform from the ground up. And while they're building for that massive future, the platform is already getting real use. As of their last update, there are over 240 unique users actively running strategies on Surge. And hey, the numbers don't lie. Just look at these live stats. We're talking 2.5 million ADA in volume, nearly 2,000 ADA in revenue, and almost 6,000 on-chain transactions created. This is a real, functioning economic engine, and it feels like it's just warming up. Okay, so that brings us to the big picture. We've looked at the problem, we've seen Surge's solution, and we've followed their journey. But what are the real long-term implications of a model like this, especially for Cardano? The key thing to remember is this incredible positive feedback loop it creates. More automated trading from Surge means more on-chain volume. That extra volume generates more fees for all the traditional passive liquidity providers on other exchanges. More fees attract more liquidity, which then creates even more opportunities for Surge to trade. It's a cycle where a rising tide really could lift all boats in the ecosystem. And that leaves us with one final big question. We've seen how Surge is making capital work harder on Cardano. But could this high-velocity, active yield model be the actual blueprint for sustainable growth across all blockchain ecosystems? Is this the key to making DeFi not just cool and innovative, but truly sustainably profitable for everyone involved? That is a very compelling thought to leave you with.